Hello, my name is Chad Hart. I'm a professor of economics and extension economist at Iowa State University. I'd like to provide a brief update today on what we're seeing within the crop markets, given that USDA has just released their June WASDE report. Along with, we've got the announcement from the EPA as we're looking at biofuel standards for the coming years. And arguably, it's that second piece of information that has had the largest impact on markets over this past week. But with that, I want to bring up my slides here so we can start to walk through some of the numbers as we see them right now. And when we're thinking about what we're seeing within the agricultural markets right now, we're seeing basically the markets have been treading water for a while, waiting to see what potential changes were either coming down the line via USDA reports as we looked at, the June WASDE and the upcoming acreage report that we'll get here at the end of June, but also waiting to see for developments on trade policy and biofuel policy as we look there right now. So this is looking at the corn table right now, and as far as what USDA adjusted here with the June WASDE report, they only changed realistically one number on the table, and that would be the 2024 export number. As you look there in the 2024 column down there in the gray box, exports were raised by 50 million bushels. So that takes us up to 2.65 billion bushels of corn being exported out of the crop we harvested last fall. Now, in this case, that would be the second largest amount we've ever exported, trailing only the amount from 2020. So right now, we're still seeing very strong export sales for corn, leading USDA to make that adjustment. Based on that, and that was, like I say, the only change made, that lowers ending stocks as we look at not only the 2024 crop, with that number now dropping down below 1.4 billion bushels, but since they also didn't make any adjustments to the 2025 column, what that also does there is it lowers the ending stocks being projected for the 2024, or sorry, 2025, 2026 season, where we're now down to 1.75 billion bushels in ending stocks there. So there's a long way to go to say what we're seeing right now is strong export markets despite the uncertainty right now, with a question of can that um, momentum that we've built within the export markets over the past year, especially, continue, especially in the face of the tariff discussions and the potential for trade agreements here. Right now, USDA's expectations do hold that to, let's call it maintain as we look forward here. As you can see for 2025, they have exports rising again by about 25 million bushels from where we're at today. The other thing that I'll point out here is when you look at U.S., EPA releasing the biofuel standards for 2026 and 2027, we don't necessarily see that impacting corn-based ethanol here. As you can see that demand for corn through ethanol has been very strong this year at 5.5 billion bushels, and we expect that to remain there as we look at the 2025 growing season. Now, thinking forward with this table, when we get to the end of this month, USDA will give us an updated snapshot on how much we planted. So we will see whether that 95.3 million acres actually did get planted to corn, and that will create some adjustments on the supply side as we go into July. We'll also be watching to see if USDA starts to move the yield estimate based upon weather conditions up to this point. Again, that tends to start in July. So we've got some pieces of information coming down the line. They're just not here just yet. So as you look at the bottom line for corn pricing, USDA held firm with their estimates of for the 2024 crop, a season average price of $4.35. And for 2025 crop, dropping down a little bit to $4.20 a bushel as we look out there. Now, in the case of soybeans, arguably, here's a table where yesterday's report on the WASDE had no changes, but today's announcement by EPA definitely creates some potential changes in this table. As we look right now, like I say, USDA didn't adjust anything for either 2024 or 2025. But the big number I'll be watching right now is, as we think forward, will be that crush number for 2025. given the announcement from EPA looking to increase biomass diesel production here, that fits the renewable fuel standard up from 3.35 billion gallons here this year in 2025 up to 5.61 billion gallons by the time we get to 2026. That could lead to a lot of pressure for that soybean crush to continue to grow. And as you look at that pattern over this 5-year period, that is what has been happening. We have seen soybean crush usage continuing to build and grow, and that has really accelerated here in 2024 with the hope of that continuing in 2025. And this announcement should do that. With that said, though, what that will also do is that should also put some pressure on those ending stocks continuing to tighten and hopefully raise the season average price. And when we think about the soybean markets here on Friday, June 13th, we definitely saw a very strong move upward for soybean prices in the futures market. Now, looking at the conditions of the crops as they went in, for the most part, we saw timely planting across especially the central, northern, and western parts of the Corn Belt. And that has led to crops that are, let's call it around normal when it comes to crop conditions. As we look right now, nearly 70% of the corn crop is considered in good to excellent conditions as we start to go through the heart of the growing season. When we're looking at soybeans, we're in that same sort of ball game here. And so thus far, I would say there hasn't been any real need for USDA to adjust the yield expectations right now based upon what we've seen in terms of the timeliness of the planting and the way the crop has emerged thus far. But one of the areas I'm going to be watching is how usage is shaping up as we go, especially through the summer and into the fall. Again, with EPA's announcement, not a lot of change for the corn market, but you're looking at a corn market that has seen strong demand through ethanol over the past couple of years, and especially here with 2023, 2024, and as we go into 2025 here, we are seeing very good usage through ethanol for the corn market that has been, trying to support the market at a time when prices have been falling. But the biggest thing is what we saw today from EPA when it comes to bio and renewable diesel. In this case, what I've got for you here, this is looking at annual production for both those fuels over time with some projections based upon how much we've done thus far here in 2025. And as you can see here, before this announcement, we had seen a pullback in both production of biodiesel and renewable diesel. But with the announcement from EPA coming down the line, I do expect to see some recovery here when we're looking at production of these biofuels. That's going to be supportive for not only soybeans, but for several commodities as we look out there. In fact, when you think about renewable diesel production, soybean oil is the biggest feedstock that we tend to use, but we also tend to use animal fats, corn oil, other vegetable oils here as well. In fact, one of the things I'll be interested in seeing here is how does that renewable diesel feedstock development continue as you look here. Typically, soybean oil is about 1/3 of all the feedstock that we use for renewable diesel. So definitely having this increase in the renewable diesel number through the renewable fuel standard is supportive of what we're seeing for these markets. Now, looking at current pricing right now, the idea is as we are working on finishing up the 2024 marketing year, the market pricing is in line with USDA's projected season average price. USDA's at 435. The market's basically at 433, so that's in line. The big difference comes with the 2025 crop, with USDA projecting a 420 price and the market right now holding in that 440 range. So the market is providing about 20 cents more on the price side here. And I think that is based upon this combination of, let's call it, still we have the ability to have a little concern from weather in the market here. After all, the drought has not gone away. But even more important, I would say that the market is reflecting the demand that we're seeing through ethanol and right now through exports that is pulling on the corn market and helping lead to some of these higher prices that we're seeing within the futures market. Now, for the soybean side, we saw a big jump here on Friday, June 13th, up 25 cents per bushel for soybeans. That has definitely pushed the soybean prices back up north of the $10 border here, but we're still seeing some challenging prices out there when it comes to selling soybeans at a profit right now. As I look at the pricing right now, these prices, again, sort of in line with where USDA is at right now. For the 2024 crop, the market's indicating right now about 10.10, and that's an improvement from where it's been over the past couple of weeks. USDA season average price is 9.95. As we're looking to the 2025 crop, here's a case where the market and USDA are in alignment. USDA says 10.25, the market's at 10.24. So the boost, if you will, in potential soybean demand through biofuels right now help bring the market back to where USDA was projecting. What I'll be interested to see in July is as we adjust the WASDE based upon these new numbers from EPA, do we see another little boost in price for soybeans as we move forward? Well, with that, I'm going to stop sharing here. That's my brief outlook on what we're seeing here in June. Like I say, looking forward, one of the big things will be the acreage report that comes at the end of June, and then the July WASDE, and that's where we first start to see, let's call it substantive changes, especially as we look at the potential yields that are growing out in the fields right now. With that, well, thank you for your time. Again, my name is Chad Hart, Extension Economist for Iowa State University.